Bismillahirrahmanirrahim. Assalamualaikum. Ladies and gentlemen, welcome to invited paper session IPS. The mirror has two faces. An analysis of asymmetries in official international merchandise trade statistics at the 63rd ISIW Statistics Congress 2021. I'm Dr. Muhammad Uzair Mahidin from Department of Statistics Malaysia. Will be the chair for this session. Good morning, good afternoon, and good evening to all of you, the delegate, wherever you may be. Ladies and gentlemen, international merchandise trade plays a vital role in economic development, linking producers and consumers in various countries into a global economic system. Mirror or asymmetrical analysis is one of the most used instruments for comparison data quality of external trade statistics between partner countries. Theoretically, the export reported by an exporting country should mirror the import reported by its reporting partner. In reality, however, due to the way that trade statistics are reported and recorded, as well as many other methodological reasons, this is usually not the case. Today, we are very fortunate to have a handful of expert speakers from various organizations to share their experience and work for better understanding of the asymmetries and to share their views on to reducing the discrepancy where possible. Our first presenter is Mr. Maki Muriawan. Currently is the Chief of Trade Statistics Section of the United Nations Statistics Division. Our second presenter is an expert team of trade statistics from ASEAN Stat, which are Ms. Lia Emalia, Ms. Maria Francisca Widawati, and Mr. N. Fatur Rashman. Our third speaker is DOSM very own Ms. Sisi Haslinda Muhammad Din. Currently is the Director of International Trade Statistics Division, Department of Statistics Malaysia. Our fourth presenter is Mr. Ulrich Idman, Head of Unit Trade in Goods Statistics European Commission, Eurostat G5. And our fifth speaker is Ms. Janine De Vera, Consultant Statistics and Data Innovation Unit, Asian Development Bank. Last but not least, the discussion will be Mr. Ronald Johnson, who is currently Chief Data Innovation and Capacity Branch, Statistics Division, UN Department Economic and Social Affairs, and was formerly the Chief of Trade Statistics Branch of the UNSD, with an extensive background in international trade statistics. Ladies and gentlemen, our today's session is a 60 minutes non-live session and can be watched on demand afterward. Each presenter will have a maximum of 10-minute presentation. As this is a pre-recorded session, so there will be no live Q&A session. If you have question or comment, please leave them in the chat box for an answer from the speakers. Without further ado, I would like to invite the speaker to deliver their presentation, followed by discussion to give his thought.
Good morning and good afternoon. My name is Maki Muriawan and I'm currently responsible for trade statistics sections at the UN Statistics Divisions. I am pleased to be here to share some reflections on methodological causes of bilateral asymmetry and to take advantage of the forthcoming revisions of trade manuals. Bilateral asymmetry in trade statistics is not a new issue, but it gains new interest, notably when developing analytical datasets such as trade in value added, global value chains, which requires a harmonized flow of trade in word input-output table, and measuring a commercial part of illicit financial flows through trade misinvoicing. It is worth to mention that measuring illicit financial flows is part of the SDG target 16.4 by 2030, significantly reduce illicit financials and armed force, strengthen recovery and return of stolen assets, and combat all forms of organized crime. Further, the UN Statistical Commission has decided to start the revision process of International Merchandise Trade Statistics, Concept and Definitions, IMTS 2010, and Manual on Statistics of International Trade in Services, MSITS 2010, in its 52nd session, taking into account the need for consistency with the update of other statistical standards such as the System of National Counts and the Balance of Payments and International Investment Positions Manual. Based on experience in various reconciliation studies, the top root causes are as follows: coverage, the nature of transactions and territories; indirect trade, trade through third country, whether or not there is re-export transactions; valuations, due to differences in imports CIF versus exports FOB. The coverage of IMTS statistical elements can be categorized into two major elements. First, the nature of transactions, describing inclusions and exclusions in IMTS. Second, the coverage of statistical territories, also known as trade systems. The gap in the recording nature of transaction is not only due to national circumstance. The analysis of the long time series data highlights systemic issues in the global compilation practices. For example, the graph shows consistent discrepancies in the past 30 years in the global trade of SITC 793 on ships, boat, and floating structures, which cannot be explained due to differences in valuation alone. The coverage of statistical territories is known as trade system. If all territories are included, then it is called general trade system, otherwise special trade system. An example is the export of gold, diamond, and platinum, HS Chapter 71 from South Africa. South Africa undertakes the processing of gold by importing gold ores into the inward processing zones and exporting the subsequent resulting processed gold. Because of its strict special trade system, South Africa excludes export from inward processing zones, leading to the significant bilateral asymmetries. The table shows no export from South Africa, whereas the EU shows $4.5 billion of imports. With the direct trade, goods are shipped from one country to another country without intermediaries. However, with the indirect trade, goods can be shipped through more than one country, which causes asymmetries in trade flows. In this case, an exporting country may not know the actual destination country at the time of exportations. In contrast, the importing countries would identify the country of origin. To reduce bilateral asymmetries due to indirect trade, it is important to consider the following: country of consignment, the last country where a commercial transaction takes place that changes the legal status, and origin of re-exports, the country of origin of goods imported for re-exportations. Exported goods may go through several countries before arriving to its destinations. If in those countries there is a commercial transaction resulting change in its legal status, it will be considered imports and re-export flows. Otherwise, it is a transit and there is no trade. To comply with custom duties, which depend on country of origin, custom administrations normally records the country of origin. However, experiences show that bilateral asymmetries are most likely reduced when applying country of consignment in the use case of indirect trade. Indeed, IMTS 2010 has recommended that country of consignment be recorded for imports for analytical purposes, including bilateral trade asymmetries analysis. The North America TIVA has undertaken bilateral asymmetries analysis on Mexico imports versus Canada exports, or southbound trade. Taking into account the role of country consignment, both US and non-US, the table shows that the country of consignment has basically reduced significantly the asymmetry. IMTS 2010 recommends the use of free on-board FOB type valuation for exports, border of the exporting country, and cost, insurance, and freight CIF type valuation for imports, border of importing countries. Furthermore, countries are encouraged to compile the FOB type value of imported goods as supplementary informations. The latter is coherent with the valuation for BOP. However, many countries do not compile FOB type imports data at the detail level. This FOB type valuation for imports is not in line with the SNA framework, which recommends the market price. Therefore, it is considered one of the inconsistencies between SNA and BOP standards. Thus, the Joint Globalization Task Team has drafted the guidance note in 2020 proposing the use of transactions or invoice values instead of FOB type valuations. Even though it may not reduce bilateral asymmetry significantly, the new approach would align the BOP/IMTS valuations with the SNA concepts of the market price. This leads us to the proposal of amendment or clarifications. First, on the topic of coverage, it is important to provide clarification on certain transactions to ensure consistencies in methodology. For example, informal cross-border trade. Further, the possibility for microdata exchange should be recommended in certain situations. The reference to the special trade system should be reduced and removed to further encourage countries applying a general trade system, along with the guidance to estimate territorial gaps if needed. And regarding country of consignment, it is important to add more justification of its importance and to strengthen capacity of countries to compile it. Currently, there is no recommendation nor encouragement in IMTS 2010 to compile origin of re-exports. Therefore, it should be further explored this possibility of adding new data item of country of origin of re-exports. The underlying data should be available because each re-export should have the corresponding imports. In addition to FOB and CIF type valuations, it should be explored to add new measures of the transactions or invoice values in IMTS datasets. Not only it would assist the compilers of BOP and SNA, but it also would reduce CIF and FOB conversions. Thanks to the forthcoming revision of BPM 6, 2008 SNA, IMTS 2010, and MSITS 2010, it is now feasible to directly address the long-standing known phenomenon of bilateral asymmetries in IMTS and MSITS. Even though it is impossible to eliminate all of the asymmetries, the global community should take advantage of the revision cycle to identify conceptual issues contributing to the bilateral asymmetries and propose an amendment in the manual or provide detailed compilation guidance for countries to reduce the discrepancies. And in addition, it also allows data providers and users to analyze bilateral asymmetries in a more structured manner. This would lead to a better analytical outputs such as TIVA, GVC, or measurement of trade misinvoicing. Thank you, everyone.
Hello everyone. Yang Mulia Datuk Sri Dr. Muhammad Muzir Mahidin, Chief Statistician of Department of Statistics Malaysia, distinguished speakers from UNSD, Eurostat, ASEAN Development Bank, and other distinguished participants. And on behalf of ASEAN Statistics Team, ASEAN Secretariat, I'm going to talk about how we use Microsoft Power BI to identify asymmetries in intra-ASEAN trade statistics. My presentation will consist of 4 parts. which is introduction, methodology, result and findings, and conclusion. With the help of EU-ASEAN program, we are beginning to work on trade statistic mirror analysis back in 2015. Then in 2018, we begin to make it available in our internal website using Microsoft Power BI. International Merchandise Trade Statistic, or IMTS, is one of key indicators for supporting the monitoring of ASEAN integration. Therefore, it is crucial to ensure its quality. One of the important issues is asymmetric data between partner countries. The need to study bilateral asymmetries through systematic and structured statistical analysis. Mirror analysis is one of the most commonly used techniques for assessing data quality, particularly for comparison of trade data between partner countries. Utilizing Microsoft Power BI, which has outstanding visualization capabilities to support interactive thinking and analysis to identify the asymmetries and discrepancies of intra-ASEAN export and import data. As you know, bilateral asymmetries occur when the reported export from country R, for example, to country P as partner don't match the reported import to country R from country P. In this analysis, the main objective of intra-ASEAN analysis are to further improve IMTS data quality, to address questions regarding methodology and challenges in data compilation from customs and non-customs data sources, to increase the awareness of non-custom and data sources, and then to discuss cooperation issues among institutions providing, compiling, and using trade statistics. We use two simple formula. First is value of reporter minus mirror value of partner. Then for the relative asymmetry, we use the absolute value of asymmetry divided by the average of the two mirror values. To implement mirror analysis in intra-ASEAN trade data, we do determine main partners for asymmetry studies. Then extraction of data 3 to 5 years to see trend, use same currency, in our case, US dollar. The top-down approach, we do identification of the main chapters leading to asymmetries, then analyze at more detailed level by product and partner country for the main chapter. This is the diagram of our database. We receive data from ASEAN member state in various formats, such as Microsoft Access, a text file, or Excel. We upload it into Eurotrace desktop application where we do data validation and data cleaning. And then after that, we upload it to our SQL Server database. For this mirror analysis purposes, we connect our Power BI to this SQL Server database. The summary steps of our analysis is first to import or connect data from SQL Server database to Power BI, and then create relation table in Power BI. This is the example of table relation diagram in Power BI. And then create data visualization report in Power BI. We have 4 pages for this analysis. The first page consists of ASEAN aggregate data differences, of course. And the second page is top product differences, consists of 2-digit HS code and 6-digit HS code. The third page is 6-digit commodities with partner countries. And then the 4th page is all the data that we use. The result and findings. Mirror analysis chart was prepared for each AMS or ASEAN member state using the data from 2017 to 2019. The first step is reporter country data was compared with other partners. And partner countries having big discrepancies with reporter country were selected for detailed analysis. The second step is mirror tables and charts by chapter level or HS2 digit were prepared for selected to partner countries. In this slide, we are showing you the HS two-digit level of Indonesia compared to other member states, which is showing two products have the highest discrepancies compared to other two-digit product. The third step of mirror tables and chart by HS six-digit for selected chapters were prepared to see details for asymmetries. In this slide, we show you the product classification differences that we could identify by page 3, which is product distribution, page of product distribution, which is showing two countries, country A as a reporter and country B as a partner, where they recorded different product commodity. And then the next example is country partner differences, which also we can see in the page 3, product distribution. You can see this time is 3 countries, country A, B, and C, where country A's reporter have recorded different from partner countries B and C. As a conclusion, with this Power BI, you could get the following information on asymmetries: top product by country, top country by product, the size by country and product, trend over time, country and product, misclassified countries, and misclassified product. We also recommend for further analysis and possible solution to conduct further analysis to identify the sources of the discrepancies of trade data, to encourage the countries to have bilateral discussion for enhancement of the analysis and possible solution. Because we also could use the mechanism in ASEAN Community Statistical System and working group on IMTS for strengthening statistical cooperation in supporting the enhancement of mirror analysis. This is the end of my presentation. Thank you for your kind attention.
Thank you, Dr. Muhammad Uzir Mahidin, Chief Statistician Malaysia, as the chairperson of IPS 125 sessions. Assalamualaikum, good morning, good afternoon to everyone, regardless in which part of the world. I'm Siti Aslinda, representing Department of Statistics Malaysia. We'll share our views and experiences on asymmetries analysis in the presentation entitled Analysis of Asymmetries in Official International Merchandise Trade Statistics, a case study of Malaysia. So the outlines of my presentations will be a little brief on introductions, methodology, which I will explain a little bit about the data sources and method of analysis, and then the analysis and the results, and also conclusions and discussions. So as a start, asymmetry analysis, also known as a mirror analysis, which examines whether a country's exports to another country are equivalent to the imports from that countries and vice versa. In Roger papers 2017, where it stated mirror analysis is a decision-making tool used to investigate differences in countries' foreign trade. It does so by examining both imports and export statistics. In terms of bilateral trade statistics, it shows bilateral merchandise flows between two countries. In many cases, the value of exports and imports between two countries are different. In other words, we see as a bilateral trade asymmetries. A few papers from as early as year of 1995 by Yees, Markle, and Osterstrom in 1998, Ferrantino and Wong in 2008, a paper from Eurostat itself in 2009, Podgorico in 2015, Chamorsak in 2016, and also Mila and all 2019 has discussed that the discrepancies mirror analysis can be caused by a variety of factors. The main objective of this analysis is to identify the excess of asymmetries of official international merchandise trade statistics between Malaysia and its selected trading partners. This analysis focuses on bilateral trade in 3 case studies, of which Malaysia versus major trading partners, and we selected China, Singapore, and USA. Malaysia versus selected ASEAN countries, where we have Indonesia, Philippines, Vietnam, and Thailand. And for more in-depth analysis with Malaysia versus entrepot countries, of which Netherlands, Hong Kong, and also Singapore. For this study, the data used were obtained from various sources. For better understandings of the discrepancy pattern, series of the trade annual data from 2002 until 2020 were observed. And for this study, we calculate the index of discrepancy for the exports of Malaysia versus the imports of selected partner countries and the import of Malaysia versus the exports of selected partner countries. This pattern of discrepancy were examined for each country, and for any spikes value, further analysis was done at the HS2 digits level. As a result and the findings, let's focus to the asymmetry patterns between Malaysia and major trading partners. As we measure the asymmetries between Malaysia exports with imports of China, USA, and Singapore, it was found that Singapore-USA discrepancy value consistently low and moderate as the value close to zero. Meanwhile, China's discrepancy values consistently high. It's been well described in the charts. And also from the graph, we could see that China recorded the highest discrepancy value in the year 2020 as the value furthest from zero. And of all the products exported to China, it is been understood that product HS47, as it appeared in the slides, reported the highest discrepancy. Let's concentrate to the charts on the right side. It was observed that China-USA discrepancy value consistently low and moderate. Meanwhile, Singapore discrepancy values is the other way around, which is consistently high. It means a serious gap between Malaysia reporting imports to Singapore with Singapore reporting exports to Malaysia. And we also found that Singapore's highest discrepancy value was recorded in 2008. And product HS01, which is a live animals, ranked the highest discrepancy value as compared to all other products imported by Malaysia from Singapore. As we can see from the graph, Vietnam, Thailand have consistently shown low discrepancy over time. However, Indonesia displayed high discrepancy from the year of 2002 to 2004, and it is a little bit up and down towards the year to 2020. And the product that contributed each year was HS02, meat and edible meat offal, HS71, and also HS63. On the other hand, Philippines recorded the highest discrepancy value in 2013 and contributed by HS51, of which is wool, fine and coarse animal hairs, horse hairs, yarn, and woven fabric. Let's focus on the imports. Malaysia imports to the other, to the exports from Indonesia, Philippines, Vietnam, and Thailand. It was found that these countries are consistently moderate and low. The discrepancy for Philippines is been identified high in the year of 2010. And as we further analysis for the product, we could found that HS79, which is zinc and article thereof, is actually given the highest discrepancy of that particular year for Philippines. As we aware, before we mentioned about Singapore is reported high discrepancy between Malaysia's imports and Singapore exports. We assume there might be some effects due to the nature of entrepot country. Therefore, we do some comparison with other entrepot countries. For these slides, we could see that it's a different performance was found as comparing Malaysia export with entrepot countries imports from the year of 2002 until 2020. The discrepancy for entrepot imports country were consistently moderate and low for the Netherlands in the year of 2020 and Hong Kong in the year of 2015 and 2016, of which were having high discrepancy. For Malaysia exports versus Netherlands imports in 2020, we found that zinc and articles thereof for the HS code 79 has the highest discrepancy of that particular year. Meanwhile, for the charts on the right side, we can see that overall discrepancy between Malaysia imports and enterprise countries exports for 2002 to 2020 shows some inconsistency pattern. The discrepancy in Hong Kong and Netherlands remained consistently low and moderate, but in 2014 and 2015, the discrepancy of Netherlands is high. To conclude of these presentations, based on the findings, it is almost unfeasible to have perfect symmetrical bilateral trade data between countries. The degree of discrepancies is different from country to country, though most of the discrepancies were consistent from time to time. Inconsistencies can be resulting from several possible conceptual and measurements variations between the estimation practices of different countries, such as difference in valuations of import and exports, difference in attributions of trade partners, differences in coding, exports, and etc. On the other part, triangular trade was a common reason in the existing literature, and the result of analysis from enterprise countries does not show substantial differences from other countries, except for Malaysia import versus Singapore exports. So for better understanding these situations, we would like to propose further in-depth analysis should be carried out on a specific country, industry or products, and the time period which might steer to a solutions in order to reduce the discrepancy where possible.
Hello, I'm Uli Eidmann from Eurostat, the European Union Statistical Office. In my presentation, I would like to give you an outlook on the future work to address bilateral asymmetries in the context of microdata exchange of merchandise trade statistics data between the EU member states. I will give you an overview of the actions currently undertaken at European Union level with regard to asymmetries. I will explain the forthcoming exchange of microdata on intra-EU exports between member states. And finally, I will give you an outlook on future work to address bilateral asymmetries in the context of that microdata exchange. Asymmetries in international merchandise trade statistics are a very well-known phenomenon. They occur for a wide variety of reasons. For international trade statistics, comparability across countries is a more visible quality dimension than for most other statistical domains. For users, it is very easy to compare the exports of a given country with imports of any other country and to detect and find the asymmetries. Asymmetries are a nuisance to the users, and the reduction of asymmetries is therefore a very important quality objective in our statistics. Amongst the most well-known reasons for asymmetries, we find the application of different trade systems, the application of different valuation principles for exports and imports, and very frequently it is a simple misclassification of product or partner which leads to asymmetries. But there are other reasons as well, in methodological differences or differences in the compilation practices. Now, on the following two slides, I'd like to give you an idea of the level of asymmetries in EU trade, merchandise trade statistics. First, with regard to the main extra-EU partner countries, and then with regard to asymmetries in the intra-EU merchandise trade statistics. Currently, we recommend member states that they regularly monitor asymmetries related to partner countries and major products, and we encourage them to periodically conduct bilateral or multilateral reconciliation exercises for major products. In order to help them with this, Eurostat provides the member states with monthly reports showing their top 150 intra-EU asymmetries at 8-digit level. On an annual basis, we have a quality reporting and assessment procedure where Eurostat compiles indicators measuring the intra-EU asymmetries. And we publish every other year a quality report, which includes also indicators on the level of asymmetries in intra and extra-EU trade. We also have ad hoc exercises, reconciliation rounds. The current limitations of such exercises, or mirror analysis as we call them, is that they require a lot of manual work. They're hard to automate. So they are very resource intensive, especially with regard to human resources. Additionally, some member states or some countries face legal obstacles, or simply national statistical offices have some reluctance for exchanging confidential data information that would be required for such reconciliation exercises. This is a very important project which will become operational in early 2022, where microdata, company-level data, is collected in a given member state. We call that member state the sending member state. These data are then transmitted by the sending member state to the other member states, the receiving member states, who can compare these data, the exchange data on the exports, with their own collected data on the imports. The ultimate goal of this exchange is to allow a reduction in the own collection of data from inter-EU importers on the side of the receiving member states, meaning that they could exempt reporters from declaring their imports, meaning they could reduce the response burden on these reporters while maintaining a high level of data quality, because the data they would use for the compilation of the import statistics would still be collected data, collected by the sending member state. This is the most innovative technical feature of the modernized system for intra-EU merchandise trade statistics. This is a graphical representation of the system. We have here the sending member state, where data on the intra-EU exports are collected, transmitted to a central hub. This hub is maintained by the European Commission, by Eurostat. At the level of the hub, the incoming data are then split according to the receiving member states, and each of them receives then their package with the data of the exports which are related to their imports. The key element in this exchange is the idea of the partner, the importer, because this element allows then the national statistical authorities at the level of the receiving member states to easily match the exchange data with their own collected data. In this microdata exchange, we intend to carry out a number of specific actions in early 2022, when this microdata exchange becomes operational, to 2023, to facilitate asymmetry studies between the EU member states. On a monthly basis, they would use the exchanged microdata on intra-EU exports to analyze patterns of asymmetries in intra-EU imports. They would carry out jointly with other member states investigations regarding asymmetries, followed up by data reconciliations and, whenever applicable, data revisions. So when asymmetries are related to errors that were detected, they should be corrected. At the end of the exercise, of course, we intend to share the lessons learned, best practices, the methodological knowledge acquired. We intend also to establish, if possible, automatic procedures that would allow the correction of certain asymmetries detected, so that the project outcome would be sustainable. At the same time, we would have an improved documentation available for the users of our statistics with regard to asymmetries. In conclusion, the forthcoming microdata exchange on intra-EU exports between member states will facilitate actions to analyze and to reduce asymmetries in intra-EU merchandise trade statistics. The expected benefits of reduced asymmetries thanks to this action would be the improved accuracy and comparability of data over time, providing users with a more accurate view of trade between EU member states. It would lead to an enhanced users' confidence in data quality, and at the level of the compilers for the inter-EU imports, it would help the integration of the exchanged microdata in the compilation process. Doing that, this would allow the reduction of their own collection, leading ultimately to the reduction of the response burden. Thank you very much for your attention.
Good day, my name is Janine and I am a consultant for the Asian Development Bank. As a contribution to this session, I will be presenting a paper where we analyze bilateral trade asymmetries in Asia-Pacific economies. As a part of the presentation, I will also be showing the methodology that is currently being used by ADB in harmonizing asymmetric trade data when constructing the ADB multi-regional input-output tables. Asymmetric bilateral trade has been an issue in international statistics ever since it was first recorded. And in order to address this consistency challenge, it is important to first understand the nature and the sources of asymmetry. So we start by first defining the Bilateral Trade Discrepancy Index. This is the measure that we used for the case study. It's also called the DIF, and it was first introduced in 2010. Formally, it is defined as the difference in mirror data between any two economies, expressed as a proportion of the value that is reported by the importing economy. The DIF will be able to give us the magnitude and the direction of trade asymmetries that exist between the partner countries. And this table summarizes some general deductions that can be made based on the results of the DIF. We won't go over it in detail, but we want to note that the degree of asymmetry between an economy of interest and any of its trade partners may be measured in two ways. One from the perspective of the economy of interest as an exporter, and the other from the perspective of the same country as an importer. Another note as well, literature suggests that discrepancies that are smaller than 20% in absolute value are small enough to be considered accurate. I'll show you the results of the case study. For this analysis, we looked into 15 economies, which is equivalent to 210 bilateral trading relationships. And we got the data from the UN Comtrade database and observed the countries for a period of 10 years, from 2010 to 2019. We present the results in a matrix-like visualization of the discrepancy indices, such that if we look at the table from a row-wise perspective, we would be seeing the discrepancy indices of these countries as exporters. And if we look at the table from a column-wise perspective, we would be seeing the discrepancy indices of these countries as importers. So as an example, this box here would signify the discrepancy index of PRC, or the People's Republic of China, as an exporter, which should be equal to the DIF of its partner country Japan as an importer. And similarly, this box here would show us the value of the discrepancy for the trading relationship between Korea as an exporter and the Philippines as an importer. First, we found that in 2019, the trade asymmetry within these 15 economies amounted to approximately $867 billion US, which is equivalent to 27% of total trade among the sample economies. Out of the 210 bilateral trading relationships, 78 showed discrepancy indices with an absolute value of greater than 20%. The top sources of asymmetries are countries in the East Asia and Southeast Asian sub-regions, and in particular, the top three sources of asymmetries by country. The first would be Hong Kong, China, followed by the People's Republic of China and Singapore. Looking at the tables closely, we see that there are some economies, for example, the Republic of Korea, that show minimal asymmetries from both the exporter and the importer perspective. This suggests that these countries with minimal discrepancy indices, an alignment in data recording and estimation processes with their major trading partners. Conversely, there are some countries that exhibit high discrepancy indices from one of the two perspectives, either as an importer or as an exporter. For PRC here, we notice that in 2019, 9 out of its 14 bilateral trading relationships within the sample appeared to be quote-unquote problematic in the sense that the DIFs recorded were above 20%. We also have the case of Singapore and Hong Kong, and for both countries and for both years 2010 and 2019, their DIFs were greater than 20% for almost all of their trade partners. So in the previous table, we saw that the magnitude of discrepancies of Hong Kong and Singapore as exporters were very high. Here, we see that in addition to having high DAFs, the discrepancy index of these two economies as exporters also appear to be negative. Going back to the table of interpretations, we recall that this suggests either an overestimation of the exports that are reported by Singapore and Hong Kong, or an underestimation of the imports that are reported by their partner economies. Now, there have been several studies for these two countries specifically, and a lot of them suggest that the sources of asymmetries for Hong Kong and Singapore are mostly due to the fact that the economies are transshipment hubs, such that goods that are not necessarily produced within their territories pass through them as re-exports. Re-exports can cause significant bilateral trade asymmetries because of a difference in partner country attribution, where imports are attributed to the country of origin while the exports are attributed to the country of the last known destination. We move on to the methodology that is employed by the ADB in harmonizing trade data in multi-regional input-output tables. But before that, we briefly discuss why there is a need to reconcile trade data, specifically input-output tables. So the trade flows that are presented in input-output tables have important analytical implications. The data in IoTs provide an extensive account of an economy's trade and production activity that often go beyond the insights that we can derive from our usual macroeconomic aggregates. And in fact, this is the reason why IoTs are used as basis for complex trade analysis, such as trade and value-added accounting and global value chain analysis. So as for the methodology that is used by the ADB, this table here summarizes the process of the harmonization. In general, we use import flows to mirror export flows. That is, the imports that are reported by economy A of a certain product that's coming from economy B is assumed to be equal to the exports of economy B of that same product. So the imports data in the ADB MRIOTs are disaggregated by end-use categories, or by BEC classification. And then by sectoral classification, we divide the data into 35 sectors. And then finally by partner country or partner economy. The disaggregation by end use, by sector or by product, and by partner economy are sourced from UN Comtrade database and also from the OECD WTO Balanced International Trade Statistics Database, or BATIS. And after the compilation, the total imports and exports per economy in the MRIOTs would be equal and should also approximate the statistics that are published by the national statistics agencies of these economies. So in this table here, we show an example of Singapore. In the first column, we have the balanced imports and exports in the ADB MRIOT that was derived using the framework that was discussed earlier. And in the next two columns, we would have the exports reported by Singapore in the UN Comtrade database. The first column here, exports, would be the values that are reported by Singapore, and mirror exports would be the values that are reported by its partner economies as imports. Now from this table here, we see the difference between the comparison of values in the MRIOT versus Comtrade reported exports of Singapore yield very high differences, ranging from 30 to 60%. Compare this with the difference between the values in the MRIOT and the mirror exports, reported in Comtrade by the partner countries, the difference here would be minimal and some of it would be as low as 1%. So this just shows the importance of harmonizing trade data in IoT. So if not for this correction, we would have differences that would be about this big as 60%. And in the case of Singapore, failing to reconcile bilateral trade data in the input-output table would suggest not only an overestimation of its exports, but also an overstating of its contribution to other countries' economic activities. So that would be all the results that we will be presenting today.
It's a good day to everyone. I'm Ronald Jensen. I work with the United Nations Statistics Division in New York, and it's a pleasure to be the discussant at this session on The Mirror Has Two Faces, an analysis of asymmetries in official international merchandise trade statistics, in which I will address the 5 very nice papers which have been presented. This is the main slide, the paper of the Department of Official Statistics of Malaysia, of the Office of Statistics of Malaysia, presented very nicely on the detection of bilateral asymmetries, specifically also at the HS 2-digit level, with various of its main trading partners. It gave as well an overview of some of the methodological reasons why there are asymmetries. The paper and presentation of the ASEAN Statistical Office focused very much on detecting bilateral asymmetries, also at very detailed level. And it has provided for that, as you have seen, a tool to detect those differences among the member states of the ASEAN community. Then the presentation of the colleague from Eurostat also indicated a number of reasons why there are asymmetries, and focusing on the asymmetries among the EU member states, where reconciliation is done, specifically also for high-value commodities. And Eurostat came up with recently with a solution to reduce those asymmetries by using a microdata exchange system. Say a little bit more about that going into that solution, how exports are replacing the partners' imports in that case. The Asian Development Bank, in its presentation, gave a full overview of the methodological reasons for trade asymmetries, which I think is very important. Trade asymmetries, yes, there are difficult for users to understand. Those are not errors. Where the Asian Development Banks gave that overview, they also came up with a solution, because for input-output tables and the multi-region input-output table that Asian Development Bank uses, you need to make sure that the bilateral trade is aligned. And there you really look for what the economic activity or the economic reality. Then the 5th paper and presentation was by my own office, UN Statistics Division, my colleague Marky Muriawan, who is leading the trade statistics work at UNSD. We are very much focusing on the methodological reasons why there are trade asymmetries. And Marky indicated a number of solutions how we could amend the methodology itself to reduce asymmetries. And there was an opportunity again now with the next revision of the international merchandise trade statistics methodology to take that opportunity to reduce furthermore. To see how that will work. The first slide, I come with an overview of the methodological reasons. I think the Asian Development Bank gave a very nice overview of this, and I'll just repeat a few here. One thing with re-exports and transshipments, that's specifically for Singapore and Hong Kong, the country of origin, the use of country of origin will result in discrepancies between reported imports and reported exports by the partners. And that's because with the re-exports in between where the origin of the goods, where they came from and where they end up, eventually the reporting at the various levels of imports, re-exports and exports will certainly result in discrepancies. Another area of differences is the fact that imports in a lot of cases includes insurance and freight. Differences in trade system, that's the coverage. Some countries take the full economic territory. Others exclude like special processing zones or difference in time of recording. It can take some time before when a ship leaves one harbor for exports and before it arrives at the destination port. There could be a number of weeks in between, which may cause a difference in reporting as well. Differences in product classification, that could be an error, but could also be the way customs classifies products. There might be differences between the customs in one country and in another country, and specifically also that on the import side, a lot more attention is paid to the correct classification of a product because it includes tariffs a bit quicker and with less accuracy. Finally, use of confidentiality. That's something that so some countries have certain kind of commodities they're sensitive with, and if they don't report any detail either on the commodity or on the breakdown by country, then obviously that also will lead to discrepancies between the reporting. I'll go into two of the solutions which were presented. One is the microdata exchange at the European Union level. So that's a new system where EU countries will send their trade files to Eurostat, the exports, and then Eurostat will then distribute the exports to the corresponding EU partner, which will pick it up and accept that as an imports. So this, as was indicated, will take place as of 2022. And will as said, really reduce the asymmetries in the EU data. Other solutions which are proposed by UNSD, by the UN Statistics Division, which has still to be discussed, the IMTS revision. But one of the things could be that only a general trade system would be reported, so covering the full economic territory, and some adjustments might be made for countries which have been using the special trade system. Adding a country of origin at the re-exports, so that we know where the re-exports came from. Then adding a transaction value in addition to the CIF-FO values might be more comparable. And finally, we could use additional data sources. So this was a quick overview of the 5 papers. Again, I thought very nice papers. Trade asymmetries is still a problem. I hope the presentations gave you a better understanding about where asymmetries come from and various ways of addressing and reducing asymmetries in the data, which is certainly necessary for certain kind of economic applications like input-output tables and the trade and value-added analysis. So I stop here. And give it back to the chair. Thank you very much.
Thank you, and congratulations to all the speakers for the great presentation and to the discussion for views and comments on topic presented today. Even though currently many consider this discrepancy as norm rather than exception, it is important to approach this scenario accordingly and develop strategies and methods for reconciliation exercise for better analysis. There have been so much detailed good information we gained from today's session, and should reflect them into our future deliberation for this matter. With that, I would like to adjourn this session. Thank you again to all the presenters, discussion, and delegate for the participation. Thank you and stay safe. Assalamualaikum.